to have our guest today. His name is Sam Primm. I want to ask you about the BRRRR method. People would say you can't get those numbers today. Has it gotten harder? And what's gotten harder in the last few years since rates have gone up?
That's a great point. It's recency bias. So interest rates typically go up. House prices typically go down.
What is BRRRR? What does that stand for?
Okay, so the BRRRR method stands for buy, rehab, rent, refinance, and repeat. I think it's the only way that people aren't going to be working until they're 80.
Yeah, and real estate is the best hedge against inflation.
Yep. Everybody has their advice of you have to do this, you must do this. And one of my pet peeves is people that speak in absolute. So I will not do my own pet peeve, but I do think there are a couple things that most people should do. Right now, in about $30 million worth of debt. And that cost me about 140 grand a month.
That would freak most people out, but then tell the rest of the story.
Yes.
Hey, what's up, ladies and gentlemen? Welcome to the Real Estate Investing Mastery Podcast. Been doing this show for 14 years now, almost 15 years. Can you believe that? Glad you're here. I'm really honored to have our guest today. His name is Sam Primm from a company called FasterFreedom. A lot of you guys have probably heard of him because he's all over the social medias and he's doing really, really well in his business. And he takes a very different strategy than what I normally have done. I'm always about wholesaling, making a fast dollar, in and out of a deal. This is the definition. Sam is the definition of a buy and hold investor. And he has a ton of property, and we're going to be talking to him about that. But here's the cool thing about Sam. He lives in St. Louis, and he's been here for a long time. I live in St. Louis. I'm kind of a hermit, but I venture out once in a while to these masterminds or something. And I met him for the first time in Florida. So I talked to him, and it was in Florida, wasn't it? Yeah.
Yep.
And I said, hey, you're in St. Louis, right? And you're all over the socials, and we should play golf sometimes. We played golf a couple weeks ago, and Sam's just he's a great guy. He's one of the real deals. And if you haven't seen him on Instagram or YouTube or Twitter, X or whatever, TikTok, he's out there everywhere. Go look him up, Sam Primm, Primm. But he's got a great company here in St. Louis. And the cool thing is the gentleman who started his company that Sam later bought the company and evolved it and made it just 20 times bigger. His name was Brian. And that was a guy when I was first getting started doing real estate in 2006 and 7. I first started studying and kind of figuring out what I wanted to do. That guy, Brian, was really inspirational to me. And he really inspired me. I never really knew him that well, but I followed everything that he did. And he was doing at the time a lot of lease options. But Brian is kind of since retired, moved on. He's still kind of semi-active in the lending business. But anyway, Sam has taken Brian's company and just made it, no offense to Brian, but he's made it 20 times better and bigger. And it's amazing. So Sam's got a real cool story. I'm looking forward to talking to him about that and sharing with you guys listening to this and watching this, how you can actually become wealthy in real estate by taking on a ton of debt, which might scare some of y'all, but that's what Sam is known for. But Sam, how are you, my man?
I'm doing well, man. I'm excited to dig in and I talk about debt and leverage and all the things that help normal people get ahead.
Talk real quick. Give us an introduction on how you got started in real estate. How long have you been in St. Louis?
I was born and raised here in St. Louis, so born in 1987. So however long that is, that's 37 years, going on 37. So born and raised here. I didn't ever plan to get into real estate. My dad was an engineer. My mom was a teacher, like super like normal, like TV commercial type of, childhood. And that's what I thought I was going to do, right? My dad worked for Boeing for 35, 40 years, whatever it was. So it's like, all right, that's what your parents do. That's what I'm going to do. I remember seeing those Folgers commercials of the dad getting up while the kids were sleeping and making his coffee and heading to work. And that's what like was my goal and dream. Right. So I started to go down that path, college, high school, college, all the things. And then a year or two after I graduated college, I read a book called Rich Dad, Poor Dad. I know that's so cliche, right? Weren't you hoping there was some, like I was in jail and I was thinking about something, decided to change my life? No, I read Rich Dad, Poor Dad, kind of opened my eyes a little bit and started to invest on real estate on the side, which I'm sure we'll get into for a few years. And then I went all in 2018 is when I went all in a bit.
So when did you first read the book?
2012.
That's
on my
crazy.
honeymoon, 2012.
On your honeymoon, you read it.
Mm-hmm.
So the book came out in what, like 2005, I think.
I think so,
maybe
yeah.
2004 or something. And it's amazing. It still has a huge impact today. What made you start thinking about owning rental properties? I mean, because that's kind of what you're doing now. You own millions and millions of dollars of single family homes, right? And what made you decide like that, going that route instead of fix and flip, instead of rehabbing or wholesaling or commercial properties, things like that?
Yeah, my original goal wasn't necessarily right away. My very original goal wasn't to quit my job. So I was looking for more of the long term wealth. I didn't know anything about anything, but I did know owning rental properties was a good way to maybe retire a little bit earlier, get a little ahead a little bit earlier. So I didn't know about the Burrs method or too much debt leverage, and I didn't have enough money to put 20% down on a rental. So my goals were to flip a house and then take that profit and use that as 20% down on the rental. So every rental I bought, I was going to have to flip a house to buy it. That was my original plan, not knowing about refinancing and not knowing about the proper way to leverage. So we were actually halfway through our first deal before we discovered the refinance method. So one of those things where you just try and figure it out. And real estate is fortunately adaptable and versatile. So we were able to kind of pivot and keep and own that rental. That very first one that we were
Yeah.
flipping, we kept it as a rental.
And St. Louis is such a good market to do this strategy in, isn't it?
Yeah, St. Louis, that you don't get the big highs of, other cities on the coast and down south, but you also don't get the huge crazy swings and the crazy lows like St. Louis. I was in college studying at that time, but looking back, all the numbers show 15. St. Louis dropped about 15%, while other markets got absolutely crushed. I know there were certain areas of St. Louis that I'm sure got hit worse, but overall it did pretty well. And over the past 5 years, St. Louis has had not one year over year reduction in price. So it's just a solid, steady market.
Yeah.
It's not the most exciting place in the world, but it's a great place to own rentals.
When you're comparing markets, you're looking at the value of the homes and the price, the values of the rents
Mm.
that it can bring in. And there's certain ratios that people look at. Is that one of the things you look at when you look at different markets? And what is that ratio called? What do you use?
Yeah, so we just invest here, but I do have students in all 50 states, so I'm pretty familiar with all the markets. We only invest locally. I tell people the best place to invest is your backyard, the city you live in. Now, if you live in downtown Miami and you want to own single family rentals, you might have to go elsewhere and do it remotely. Or if you live in LA or something and you want to do single family rentals. But the best place is if your strategy you want to use works in your back market, in your backyard, do it there. So that's what we tell people. And in St. Louis, we just try to look to get like $200 to $300 a month cash flow after everything. So make sure there's at least 20% equity and make sure that we're cash flowing at least 250 to $300 a month, like net after everything, all expenses. And some people look at like that 1% rule, which is how much money you have in the house will rent cover 1% of that. So if you have $150,000 mortgage on the house, you need to get at least $1,500 a month rent. Now it's just a general rule. You still have to dig in because certain markets have higher property taxes or certain markets have different types of laws, and insurance is higher in Florida and Texas right now than so there's other variables. But in general, most people say if my cost basis in the property, I can get 1% of that in rent, it's probably worth digging into. But if I have 150,000 in a house and it rents for 1,200, there's no point in even looking at it because we know it won't
Yeah.
work.
I want to ask you about the BRRRR method, and do you still call it that? But people would say you can't get those numbers today. That's like it's impossible. It is so. Can you?
You can, yeah. So there's a few different things that I've looked into over the past couple of years to continue to do the Burrs deals. But I'm also, well, I'm hard headed, but I'm not that hard headed. That's why I've kind of shifted some of my teaching into it was all about the Burrs for a while. Now it's about find the deal, find the funding, and then let's figure the best strategy. Is it wholesaling it? Is it flipping? Is it doing a short term rental or a midterm rental, maybe to help with cash flow? So it is possible today. It's a little bit harder than it was. I also think, Joe, that it's never going to be what it was. I don't think we're ever going to have that 2017 to 2021, 22 timeframe where prices are 18. There's a little blip, but prices are pretty steady. Rents are going up with it. Rates are low. Historically, the Fed's funds rarely at zero or near it. So I don't know that we're ever going to have that again. So I think we just have to get creative.
Yeah.
Midterm rentals are a huge thing that a lot of my students are doing now. They work in a ton of areas, especially around hospitals. You're able to get double the rent basically. And if you do a good midterm rental, you're still 85, 90% occupancy, and that's
So what do you
renting.
mean by midterm rental? Talk about
So
what that is.
yeah, so midterm rentals are like renting out to traveling nurses or corporate leases or insurance displacements. And a lot of people think that the market's not big enough, but they're completely wrong. If you go to Furnish Finder, there's about 250,000 midterm rental listings. And that's Furnish Finders is the place to go for midterm rentals, whether you're a traveling nurse or you're a corporate lease or you're an insurance displacement lease. That's where you go. There's 2 million traveling nurses in the country. That doesn't even talk about like insurance displacement. Like you remember this a couple of years ago, Joe, there was a tornado came through right around Christmas time in St. Louis. My brother-in-law's house got hit, and
Really?
he did 3 6-month midterm leases at houses in the area while his house was getting rebuilt and put back together. So it happens. It doesn't happen as much as somebody needing to move their family from one house to the other, but the
Yeah.
supply is so low that midterm rentals are just an option. It's like short-term rentals 15 years ago. And then there's things like, going with a 30-year DSCR loan instead of a small local bank because the rates are better. So it's just one of those things where there's 4 or 5 levers you can pull to get from like negative 100 cash flow to positive 200 cash flow. And while that's not like anything to write home about, $200 a month, you are owning a real estate or a piece of real estate using little to none of your own money. So it's still worth it because that asset will create wealth for you in the long run.
Back in the mid 90s, I was starting to think about buying a house.
That's a long
And I
time ago, Joe.
remember a long time ago, man, I'm old. Back in the 1900s, last century. Um, so, like, I remember talking to people at that time, and I forget what mortgage rates were. They were probably 8%. But I remember talking to people then that were excited about 8% interest rates because they used to be 5 years, 10 years earlier, 15, 18% interest rates, right? But here's this funny thing. I'm sitting there looking at a book over here, Nothing Down by Robert Allen. And remember that it's a famous book. And it says on there, updated for the 80s. And I found it on eBay. But people back in the 80s, 70s, 80s, 90s were buying rental properties, even when interest rates were above 10%, and they were still cash flowing. So
Yep.
people, think the sky is falling or whatever because interest rates are rising, and they think that there's no way you can invest in real estate because it's different now, and interest you can't cash flow, but you actually can, and you're living proof that it's actually happening. But has it gotten harder, and what's gotten harder in the last few years since rates have gone up?
That's a great point. It's recency bias. So people have recency bias. They only remember what happened the past year, and as things change, people have trouble changing and adapting with it. That's why the cream rises to the top because not everybody can adapt with the changing, environment around them. So that's a beautiful thing. People like you that are successful are able to have perception, or are able to get out of their own perception and have perspective.
Yeah.
Perception is what you think it is. Perspective is what it really is. So very few people are able to get perspective and actually understand the bigger picture beyond just what's happening right there. So aside from that weird little tangent I just went on, some things that have changed is interest rates have gone up, which your cost of money goes up, and house prices, it's good and bad. It's good if you own it, bad if you don't, have not really fallen with interest rates raising. Interest rates usually typically go up, house prices typically go down. But the fact that our supply is so out of whack and is so low, we have this headwinds of interest rates and cost of money and inflation, and everything's making it harder to own and buy things. But prices in general seem to keep going because the supply is so low and there's always somebody that can afford it or is in a good enough financial situation. So the cost of money is a tough pill to swallow. Lots of things that my students are doing and other people are doing is a couple things, as I mentioned it earlier, but going a 25-year mortgage at 8% at a small local bank is okay. But what if you can get a 6.5% over 30 years at a national DSCR lender? So kind of getting flexible with your long-term funding options is
What
one
what
way.
is DSLR?
DSCR is debt service coverage ratio. So it's just it's a different type of funding. It's not based off the Fed's funds rate. It's based more off of what the 30-year mortgage and funds, just these big, huge hedge funds and big companies are becoming lenders. So it is just a different way to borrow long-term debt that's going to give you 30 years, 25-year mortgage over 30-year mortgage. That 30-year mortgage is going to give you a couple hundred more bucks a month.
Yeah.
Now, granted, it's a longer time to pay it off, but if you're worried about it right now, you're going to get a little bit more there. So there's that. A lot of people are afraid to manage their real estate properties. So if you manage in house, if you do a good job, one, rental is going to take you an hour to a month maximum to manage if you have your systems in place at all. So that's a way to save a couple $100 a month is by
That's
managing
huge. And
your own
I want
house.
to, oh, that's huge because a lot of people think you have to hire a property management company
Correct.
or they think it's really hard. Um, and that can add significant savings. I mean, more money into your pocket if you learn how to do it yourself, and it doesn't take much time.
It does not. If you just do a few simple things like utilize technology that's out there, like people don't understand that you can go to a technology, get a free one or a pretty inexpensive one, and they will do the background check and credit. They'll do all that stuff for you. You don't, the company that you're going to hire is going to do the same thing. So you can just have them do the background check, the credit check. You set the expectations clearly. You have some type of place for them to go online and communicate with you or a Google number or something. Like you don't have to get over technical with it, but if you do the BRRRR method, which is what I really like and preach, you have a freshly rehabbed house. So you're not going to be getting a maintenance call every single week
Yeah.
and having to figure out how to you'll get a few and but in general you just rehabbed it. You just made sure all the windows were working. You made sure all the toilets were fine. You did everything. So you're going to have minimal maintenance in those first few years. So that's one way to save a lot of money because if you're renting something for $2,000 a month, the property management company's probably going to charge you 10% a month, which is $200. They're probably going to charge you one to a half of a month's rent to get it leased up in the first place. So there's another, 1,000 to 2,000. They're upcharging your maintenance probably by 25% on
Yeah.
what their cost is. So that's one way that is it's scary, but so is working a job and relying on someone else your whole life. Like you have to get over these fears and understand you're going to have to get uncomfortable. And if you managing a property for a couple of years while you're building up some, equity and you're building up some stable properties before you hand it off to somebody else, if that's you're uncomfortable, well, then you should consider yourself lucky.
Oh yeah, and I know guys that, and this isn't me, but well, it is actually. When I owned a bunch of rental properties, I just hired an assistant to do it for me.
There
It
you
was
go.
way cheaper.
VA.
She spent 5 to 10 hours a week maybe on the property management side of the business, and then helped me with the rest of my stuff. But you can hire VAs to do this for you, and there's so many good programs and books and courses out there on property management that you can just give to your VA and say, study this, implement it. Okay, so cool. I want to talk about the BRRRR strategy because we've been
Okay.
talking about that a little bit. What is BRRRR? What does that stand for?
Okay, so the BRRRR method stands for buy, rehab, rent, refinance, and repeat. We're going to get rid of that last R, repeat. We're going to change that to systemize because repeating, going back and doing what you did is not any way to grow and scale. So we're going to systemize. So I changed the last R to systemize. So it's just a way to creatively buy assets using little to none of your own money by borrowing money. I can go over an example or go over the letters, but it can be used for anything. I bought 6 apartment complexes with the BRRRR method: 9 unit, 12 unit, 19 unit, 27 unit, 29 unit, 32 unit. And I just offered on an 80 unit, all with this method. Now, while the deliverable is a little bit different than a house, but you can do it on a single family rental. I've done that 150 times. You can do it on self storage. I have 3 of those. So you can do it on any real estate asset class as long as you're following the process and going through the letters the right way.
This used to be the big thing that everybody was talking about 5 years ago, the BRRRR strategy. It was big on bigger pockets. Everyone was talking about it, but people say you can't do it now anymore today. But I just want to clarify that you still can. Maybe call it something different, but just so I'm clear, you can still buy rental properties today that cash flow a few $100s. You can still get mortgages that will let you cash flow that. And if you can learn how to manage the properties yourself, it's not that hard, is it, to find a property that will cash flow a little bit for you?
Not if you're picking the right markets and not if you're doing the whole process the right way. Like the B, right? I'll just go through it briefly for those.
Yeah,
The
yeah.
B, the buy step. If you're able to buy a property at a deep enough discount, your cost of owning and your cost of like your long-term loan will be less. So maybe before you could offer at 80 cents on the dollar minus repairs. Now you just have to offer at 75 cents on the dollar because your money costs a little bit more. So maybe could have added 15 of them this year, 5 years ago, but you only add 5 this year. So you might have to be more selective for sure, but it doesn't mean don't do it. You're buying a damn rental property with little to no money out of your pocket. The other option is putting 40 grand down or 20% down on it. So even if you go through the whole process and you're out of pocket 4 or 5 grand, which happens a ton these days, that's still better than putting
Yeah.
20% down on that
That
$250,000 house, right?
that's a good point. I wanted to clarify that because one of the big advantages to the BRRRR strategy is that you can get your money back. And then maybe 5 years ago, you get all your money back plus some, because after you buy it from maybe a hard money lender and then you rehab it and fix it up, then you put a tenant in there and then you refinance it with a longer traditional mortgage, right? You can get your capital back that you put in the deal. So maybe you can't do that now. Maybe you actually are putting in 4 or 5 grand, is what you're saying.
Hmm.
So maybe you're not getting as much of it back as you used to before, but that's still really good. You're buying an asset that cash flows $200, $300 a month, and you're out of pocket for that is only $5,000, $10,000. That's still very, very good return on your cash. Am I kind of getting it right there?
Yep, 100%. I mean, a few years ago, I remember one of our employees bought like 15 bird deals and he pulled out 211 grand on those. Like, that's how easy it was. You were able to do it. They would cash flow. You'd pull out extra bit of money. You'd cash flow 350, $400 a month. So that's when it was easy. That was the kind
Yeah.
of the time to really step on the gas. And we did. And now it just looks different. Now we're getting all of our money back or leaving maybe a couple grand in the deal, and we're cash flowing 175 bucks a month. Like, we're in a different position, so I'm not going to tell everybody to do this, but I'll do it for 50 bucks a month, because guess what happens? That property that I'm getting paid $50 a month to own goes doubles in value every 15 years. The first time home buyer house price points more than double, but go back and look at the house value charts. Those listening, houses double in value every 15 years. Somebody else is taking care of the owning expenses and all of the debt that's getting paid down. I'm not paying any taxes because of the tax savings. Plus, you're getting a little bit of tax-free cash flow, and it strengthens the balance sheet of my overall portfolio of businesses because I have this equity built in. So real estate does go up in value over time. So if you're able to do that, even if you have to come out of pocket, I'm not suggesting someone do this, 50 bucks a month. I did this. I said I'd be okay losing 50 bucks a month on a rental, and I got crushed online for it. Ken McElroy, I think, called me an idiot. But
I remember
anyways,
that. Yeah.
people, how much is the average listener putting in their 401k every month? Probably a several hundred, even if their employee's matching it. And I'd rather have a rental than a 401k all damn day. So the point is, it's just this vision of no money, 500 bucks a month cash flow, $80,000 equity, easy, pulling out 10 grand. Okay, those days are gone, but it still works
Yeah.
for those that are doing things the right way and being strategic in each step and having some discipline rather than just buy.
Yeah. So you got to look at this because this is one of the mistakes I made when I was first getting started is I thought, oh, $200 a month cash flow, right? And if I got 5 deals, that's $1,000 a month. And I would spend all that money
Yeah.
and not thinking about future vacancies, maintenance, and
Mhm.
repairs. And so when you talk about cash flow, there's a big difference between gross cash flow and net cash flow,
Mhm.
right? Will you talk about that a little bit? And then after that, I want to ask you, don't let me forget, I want to ask you some of the benefits of owning rental property because you touched on it a little bit. But okay, so talk about the net cash flow. What is that? How do you calculate that number? What are you taking into account?
So I've changed it and fixed it now that I have a portfolio that's somewhat mature. Before, I would just take it's called the cash flow formula, and the beautiful thing about this one is that they're pretty known variables. When you're buying and you don't know exactly what it's going to be worth, or what it's going to appraise for, or what exactly how much equity you're going to have, or what the rehab's going to cost, it's a little scary, that initial buy. But when you get to the rent step, it's pretty well known. So you just take your rent minus your expenses, and there's 7 major expenses to account for. I only accounted for 6 up until about 2 years ago. But you just take your rent, which you should be able to figure out. Don't use the rent's estimate; it's a fine like barometer. But go see what properties are renting for in that area, just like you do on house purchases. So get actual rental comps, so you'll know it. Then you subtract out your mortgage. You should generally know what your costs are going to be in your interest rate. Then you subtract out your taxes. You can find that number. Then you subtract out your insurance, get a quote on that. Then you subtract out your maintenance. We do 150 bucks a month per door. So, 5, 6 months go by, nothing, and then a water heater or something goes out. So, you have to put that away. And then you put money away for property management, 10% of rent, or if you're managing it yourself, I would still put some money aside in case you ever
Yeah.
do offload it. And then you subtract out vacancy. put 5% aside. The biggest expense in owning rental properties is turnover, because you still have all those expenses I just mentioned, but no income to offset it.
Yeah.
And most people are going to have 2, 3 months in between tenants. So A, do everything you can to keep your tenants. B, set some vacancy aside for that. And then the last one I didn't account for is CapEx, capital expenditures, just because I didn't think about it. Everything was brand new or newer in the property. If it didn't have 5-year life on it, we'd replace it on the rehab. But stuff happens,
So
right?
CapEx is like replacing the roof every
Mhm.
10, 15
Yep.
years or something like that,
Yep.
right?
So stuff happens, and we're starting to account for that now. But if you do all of that and are realistic in your numbers, and your cash flow in 200-300 bucks a month, that's a home run, or even $100 a month these days. A lot of people I know would say they cash flow 500 bucks a month, but they didn't put money aside for vacancy, or they didn't put money aside for capex, or even maintenance, maybe even. So if you account for all of that and it works, keep it. If you account for all of that and it doesn't cash flow, but there's still equity, flip it. That's that's the beautiful thing about real
Oh
estate.
yeah,
You can
yeah.
buy
Oh my
rehab it
gosh.
and then flip it, or buy rehab it or rent it. It's kind of up to you.
It's so important if you own rental properties that you set aside that money, because it can be so stressful if you don't have that money saved when you get a vacancy or the tenant is late, right? And you're freaked out because, oh my gosh, where is this money going to come from to cover the mortgage because I didn't get rent, or paying for when they do leave to repaint the walls and replace the carpets or whatever. If you have that money set aside, I'm speaking from experience, you will not be so stressed out and worried about it. Because sometimes a lot of the people that say this is so stupid, why would you be short $50 a month on a property, don't realize that you're setting aside this money for vacancies, maintenance, repairs, capex, things like that in the future. You can sleep at night. You're going to be okay. And there's at least 4 or 5 things that you don't necessarily see as a benefit for owning rental properties. You already talked about these. Appreciation is one of them. That house is going to appreciate over time. Principal pay down is another one. Who's paying your mortgage on that rental property anyway?
I'm not. Your
The
tenant
tenant
is.
is. Right. They're paying it. So it's okay. And then you've got tax benefits, tax write offs. And eventually you can get to a point where if you have other businesses, you may not have to pay any money in taxes. I mean, Sam, when is the last time you paid federal income taxes?
2021.
2021.
And it
All right.
was
There you
because
go.
my accountant wasn't doing it right. We got a new accountant, and we haven't paid it since we got the right person in place.
So you can get appreciation, principal pay down, tax write offs. You also get forced appreciation. In other words, you get equity in the
Hmm.
deal, right? So like you're typically buying a property at 70 to 80 cents on the dollar. So you're going to have you should have about 20% equity in the deal. And as you pay down the principal and as the equity, the house appreciates, you get more and more equity, which allows you to create more leverage so that you can buy more properties like this and just keep on repeating it over and over again. Are there any other benefits that I
Well, you didn't
didn't
mention
think
it's
about?
it's small, but you didn't mention the cash flow even, right? You should be getting that 50, 100, two
Yeah.
hundred buck a month cash flow, because you talked about it earlier. Your gross cash flow can be 600 bucks, and you can still lose money because you have to account for these things, like you're setting money aside for your real
Yeah.
estate taxes at the end of the year, setting money aside for vacancy, aside for maintenance. So it's your net is what you need to worry about. You said, but you got the cash flow, and then the other side of the coin is you get that equity that really grows, and then you can do cash out refinances and pull it out tax free. Like my very first rental property I bought in 2014, end of 2014, so 2015 refinance, so right at 10 years. It was in Maryland Heights. It was worth 125 grand. I had a 100-year mortgage on it. Now it's worth 270 grand, and I have a $60,000 mortgage on it. So I have $210,000 in equity because of what you just mentioned. It goes up in value over time. In 2018, I think it dipped a little bit, but guess what? It went right back up. In 2020, everyone freaked out and went down a little bit, but then it went right back up. So in the long run, death, taxes, and real estate doubles in value every 15 years. Those are the 3 guarantees in life if you own real estate in the right area. So there's
Yeah.
just so much that goes into just that one. And then what happens if you do it 5 times or 10 times or 100 times? So it's just, there's so much power to it. And this is not even mentioning the fact they didn't have to use any of your own money to buy it, or very little of your own money to buy it. Hey, Joe, if you want $200,000 in Bitcoin, how much are you going to have to spend?
200,000.
If you want $200,000 in stocks, how much are you going to have to spend?
200,000.
If you want a $200,000 house, you can even put 20% down, or you can do this and have zero money in it. So it's just one of those things where it's just not easy. It's not like direct depositing into a stock or
Yeah.
crypto. So that's why people don't do it. But if you can do it the first couple of times like anything else and learn the flow and learn from your mistakes. Or the smarter thing is to learn from somebody else's mistakes and have guidance. It's an absolute no-brainer. And I think it's the only way for the future generation to get ahead, because we're behind this financial, flow of debt and inflation, and the cost of everything's going up. I think it's the only way that people aren't going to be working until they're 80
Oh man. Yeah, and
in
real
these
estate
days.
is the best hedge against inflation,
Yep.
isn't it?
It's made
Because
me
as
millions.
obviously this goes without saying, you need, if you're going to go into this real estate game, buying long-term rental properties like this, it's got to be long-term. You got to have a long-term view to the horizon. This isn't get rich quick. This isn't even get rich in a couple years, in 5 years. This is something that is going to be building you wealth over time. And in 30 years, you're going to be sitting on a big fat portfolio of free and clear rental properties, or maybe you keep on leveraging it up and you keep on buying more and more real estate. But this is for somebody getting started. Maybe they have a full-time job, Sam, right now. They're working 40, 50 hours a week. They don't want to quit. They're kind of happy where they are, but they're not happy with what the stock market's doing or just investing all of their money into the 401ks or whatnot. They want to get into real estate, doing some of what you're talking about. What kind of advice would you give them to get started?
Everybody has their advice of, you have to do this, you must do this. And one of my pet peeves is people that speak in absolute. So I will not do my own pet peeve, but I do think there are a couple of things that most people should do if they want to get going in the right direction, the right path. Because the people that tell you have to do it this way, you're following their path, and my path's different than yours, and yours is different than anybody else listening. So the couple of things that I think most people should do to set themselves up for success is one, you need a base level of knowledge. You don't have to be an expert. You won't be an expert. I'm not an expert. You're not. It's just the things change. We're not experts at everything, because it's always moving and shifting. However, you do have to understand the difference in wholesaling and flipping, or a closing, double closing or a signing, or what ARV means. You have to have a base level of knowledge so that when you're talking with people or reading or learning, you're able to absorb the information. So getting that base level of knowledge for free from your podcast, from my podcast, from YouTube videos and things like that, I think is important. And then the second thing that I think is almost a non-negotiable is getting involved with your community. So join your local Facebook groups, your local meetups. All the active investors go to meetups, and all the active or want to be active investors are on the Facebook group. So just get a base level of knowledge, get involved in a community, and then at that point, you'll hopefully have made some connections and built some confidence that you'll take action. And you're never going to know what you want to do until you do your first deal. You may completely say, I don't want rentals, or I don't want a wholesale, or I don't want to flip. You're going to understand what you do and don't want. It's like trying to understand what you want to do at a city you've never been to. You have to go there and experience it first, and then you'll figure out where you want to go. So I think those are the main things, because aside from the obvious, having connections and having knowledge builds confidence. And what does confidence do? Confidence leads to action. You're not going to do anything unless you take action. So aside from the like X's and O's that those two things cover, I think they build confidence, and in confidence, you'll be more likely to take action if you're confident.
Yeah, that's interesting. It made me think about you mentioned buying in your own backyard is where you
Mm-hmm.
recommend people start. What about somebody listening to this who is in Miami and they want to start buying rental properties like you're talking about? How do you find the good markets? And then how do you find the people that you trust that can help you find rental properties in those markets?
Yeah, so the best places to go are going to be the Midwest and the Southeast. Just the cost of living, the rent versus what the properties go for, like you mentioned earlier, is good. Laws tend to be fair. I'm not going to say landlord friendly. I'm just going to say fair, right? I can't kick somebody out on the street tomorrow if they're not paying or wrecking the property. I still have to send them eviction. They still go to the court. The judge says, give them another shot. They stick to this plan, then they're gone, or they're gone now. So there's still a fair process as opposed to some other places. So I think those are kind of the areas to lean on. And I tell people, having boots on the ground is very, very important. So whether it's a relative, a cousin, a sibling, a parent, a friend from college, whatever it is in the Midwest or the Southeast that will, at a minimum, go check on the property for you and check on things. Hopefully you can get some type of partnership or equity with them, even if it's small, to have them work on it is a big thing. Like there's a special education math teacher in LA, for example. He's bought 28 rentals in St. Louis in the past 15 months, and we're his boots on the ground. That's the advantage of us being here and being in my community. But we're the boots on the ground. So either partner with somebody or get a part of their community that's in a good place where you can, have them be boots on your ground, or find somebody that you trust that's willing to be boots on the ground. It's pretty tough to live in Miami and decide you want to invest in Charlotte not knowing anybody. It's
Yeah.
possible, but it's kind of tough.
A few more questions. We got about 10 minutes. The first part of the BRRRR strategy, BRRR, is buy.
Hmm.
And I think I've said this for a long time because I remember when I was first getting into real estate, watching Brian, what he was doing. I wanted to own a ton of rental properties. And so I studied everything about property management, managing rehabs, selling the deals on lease options and owner financing and all that. But one of the most important skills that I ignored for a long time was how to be a deal finder, how to find the good deals. I thought they were on the MLS. I thought people would sell them to me. I thought I could just find them, from the local meetups and stuff like that. But I soon quickly discovered when my back was against the wall and I was hemorrhaging cash because the market was collapsing, the people that were successful were the ones that knew how to find good deals. And even when the market was collapsing, there were still people buying deals. And the people that were making the money, if they didn't have any money already, they were the deal finders. They were the ones going out there to find. So, talk about today in this market that we're in. What are some of the strategies that you're finding it's working for people to find deals? What are they doing? Where are they finding the deals at?
Yeah, so we have 5 full-time acquisitions reps. Their entire job is to find deals. So I got a pretty good sample size, and they all kind of have different things that they utilize. So half of our deals come from from networking. The other half come from marketing. But we buy 50 houses a year from real estate agents. So real estate agents are the front lines of the real estate industry. Most of them don't understand investing, and even the ones that do, if they do 20 transactions in a year, 1 or 2 of them are going to be, those handyman fixer uppers. So networking with agents that understand investors, that bring you those pocket listings of that hoarder house, that pre-foreclosure, that distressed property, and getting ahead of it is a huge resource for us. Now, our number one buyer that buys 30 houses a year from agents, he's been doing this for several years. So it's taken him a while, and he's built relationships with the right agents. But if you spend 6 months and try to find the next 6 months and try to find 5 good agents that will bring you their deals, that's a gravy train. That's hopefully a handful of buys a year from here until you're done, maybe more. So agents, wholesalers, go to the other people that are the hunters. Like, yes, you have to pay for their services with a markup on the deal, but if it meets your numbers and you're still able to buy it 75, 80 cents on the dollar, good wholesalers buy deep enough to have that happen. So those are your first two, I think, agents and wholesalers. If you want to get like networking and free, you can go to just, we buy houses from a bowling alley owner. He writes, Ben buys houses on top of his bowling lanes, and he's in drinking leagues with everybody, hanging out. Something happens, somebody passes away, parents moved to an assisted care facility. He comes to us and we pay him $5,000 if we buy it. So there's those types of things. And then marketing, we just had our biggest lead week ever last week. We got like 105 leads, which is a lot for us. 45 of them are in direct mail just last week, that's not normal for us. So direct mail is a huge way for people to find deals. It's
I
costly. You have to
I've been
continue.
finding a huge uptick
Have you?
recently as well in my direct mail.
I
Yeah.
wonder what it is. Do you think we're just getting good, or you think some to do with the market,
I
right?
like to think it's because we're good marketers. But I think it's maybe, people are getting nervous what's going on in the economy and the news, or right now as we're recording this with tariffs.
Hmm.
People are scared that Trump is driving us into a war with China. So maybe there's some fear going on in the market. I don't
There,
know.
there could be, yeah. So direct mail is a good one, but it's costly, and you got to be consistent with it. We buy just as many houses on letter 5 as we do letter 2. So obviously, if you didn't send letter 5, you probably weren't going to get it. And then we do TV. I know not everybody can do that, but that's just more of a brand builder. I think it just kind of helps all of our other platforms. And then we do some cold calling, which is you can. The beautiful thing about technology today is there's a million of them. We have one called Deal Pilot where you're able to utilize AI to say, hey, 63304, I want to find houses that were built from 1940 to 1980 that have an absentee owner, that are in pre-foreclosure, that have a lien on it. So you could do that before and stack them, but now with AI, you just click a button and it gives you the score, and then you can skip trace them and call them, email them, text them, whatever. So utilizing technology, I think, is a great way for people to find pretty inexpensive leads. And then driving for dollars. All our acquisitions reps, before and after appointments. They're driving the area to get a feel for it
Really?
anyway. They just drive for dollars and have their app up and enter a few that we're able to put into our list. So there's other ancillary ways, but those are the main ways we're getting deals.
If somebody's just getting started, what would you recommend them to focus on?
I would recommend to focus on 2 or 3 of those lead sources. There's about 20 of them, and see if they're good at those. If they try one, maybe, but that's kind of putting all your eggs in one basket. If you try 10, I promise it's not going to work. So I usually tell people for sure wholesalers, super easy to find. Look, Google them, Facebook groups, meetups, those bandit signs you see on the side of the
Yeah.
road, those are all wholesalers. So wholesalers, I think for sure. If you want to get another networking source, agents. And then I usually tell people either driving for dollars, direct mail, or those bandit signs, putting them out themselves is a good way. So I would just pick 2 or 3 of those, and then just see which ones you're good at. Maybe you have a niche for drive for dollars, or maybe you're really really good at networking and you didn't know it, or you're just really a social sales type of person. You're going to want to focus more on that. So I would just pick 2 or 3 and then go deep and then go wide.
Driving for dollars, believe it or not, still works really, really well. I know a guy in Utah. He used to teach and coach people how to drive for dollars, and he got frustrated with the coaching business. It's a lot of work, and he just was making so much more money actually doing deals. So he quit coaching, is now just driving for. He's pretty much canvasses the entire state of Utah. He says people driving for dollars and giving him leads, and he's just in a very competitive market is doing really, really well. But the great thing about driving for dollars is it doesn't cost much money. Anybody can go do it. You can hire teenagers to do it for you, maybe. And you're just looking for properties that have the gutters hanging, the grass isn't being cut, something's going on, there's trash and piled up newspapers or whatever. And you can drive the same neighborhood every 3 months and find new houses
Yeah, for
that would
sure.
be
So
good potentials.
we have some students that they just drive to work every day a different way. Not every day. Let's be like probably 3, 4 days a week. They just leave 10 minutes earlier. They get home 10 minutes later, and they're just kind of weaving in and out throughout different areas of town on their way to work. Sometimes they're missing the rush hour traffic too. And they just do that. At the end of the month, they have 20, 30 properties, nothing crazy, but they're able to call, text, put it in direct mail sequence, whatever. It's just one of those things like anything else. You just have to reasonably weave it into your life as much as possible. And I think driving for dollars is a great way. And then there's also the way you can just efficiently try to do it, on your way to work or on your way home.
Direct mail has always been my favorite, man. I remember my first deal was in Warrenton. And I sent a lady a postcard. Even back then, this was 2007. This is my first wholesale deal. Even back then, I remember I bought this guy's course. And do you know Chris Chico?
Chris Chico. I don't think I know that one. No.
Okay. He had a course called Absentee Owner Profits. And at the time, I remember thinking, man, everybody's doing direct mail. And he had a way to get this list of absentee owners. I thought everybody's mailing absentee owners, tired landlords. And he had this ugly postcard. And I thought that stupid, ugly postcard can't work. But man, I was like, I got to figure this out. If it's working for him, what other options do I have? So I'm going to do it. And I forced myself to just do what this guy said to do. I sent a link, and then at the time I was trying to buy houses in Webster and Kirkwood area. And so I sent a postcard to somebody who owned land in Webster. She called me and said, well, I don't want to sell my property there. I want to sell this other property I have over there in Warrenton. Was it Warrenton?
Warrenton's right there.
Wright City. It was Wright City.
Okay, out that way, yeah.
Further out. What's further out? Wright City or Warrenton?
Warrenton's further out than Wright City.
So then it was Warrenton. All right, anyway. But this lady finally calls me and she begged me to make an offer on her house. Can you believe this, Sam? She begged me to make an offer, and it was a 3-family. And out there's no 3 families. I couldn't get comps. I was so scared. She begged me, and I looked, and it had expired the year before for $140,000. I pulled a number out of my you-know-what, and she said, okay. I said, I can give you 50 for it. And she said, all right, 50. And I could not believe it. So put a sign out in the yard the next day, sold it for $65,000 the next day. And, of course, we had to go through closing and all that. But I just made, and so that's when I realized the power of consistent marketing, right? The power of sending out, whether you're doing driving for dollars or cold calling or direct mail, do not stop, right? Because the deals are going to come to you. And since then, I've discovered, what's even equally as important as sending out that first batch of marketing is consistently following up with sellers that do call you, right? Mm-hmm. When they do call you, send them an offer, and you send them an offer every 30 days is what I like to do, but consistently follow up. So you guys at FasterFreedom have an amazing marketing team. I remember going to some of the meetings at Faster House before you got there, or maybe when you were there, I don't remember. But seeing they would share the numbers, it was like completely open book, and I just was blown away by how good you guys were with tracking all your metrics. So kudos
Yep, thank you.
to
Yeah,
you.
what you track improves, right? And what you focus on grows. So yeah, if you're not tracking what types of piece of mail you're sending, where you're sending them to, what lists, your response rate, I mean, you'll probably make it by. But if you really want to get efficient and increase those margins, you definitely have to track things.
Okay, so I should have asked you this at the beginning because you talk about this. It seems like every couple days on your Instagram posts, right? How much debt do you have now, and how much do you pay every month on your debt payments, and then tell us the punchline after that.
Yeah. So right now, in about $30 million worth of debt. And that cost me about 140 grand a month in mortgage payments. And that's mortgage. That's not, taxes or insurance. So about 140 grand a month in just mortgage, principal and
And
interest.
that would freak most people out, but then tell the rest of the story.
Yes, so that allows me to own about 51 million in real estate. So 30 million's a lot, but 51 million is more, and the difference of those
Yeah.
two is 21 million. So I mean, if I did everything the normal way or cash, I'd have like a million in real estate. So and then the other side of it, the more powerful side is that 51 million in real estate brings in about 350,000 a month in rent, which is obviously more than enough to pay my mortgage, my interest, taxes, insurance, all the other ancillary costs. And it cash flow is 20 grand some months, 40 grand some months. It's not a huge amount of cash flow for 50 million in real estate, but guess what? It's 50 million in real estate that I didn't have to use my own money to buy. And if it does what I said it's going to do, in 15 years from now, it'll be 100 million in real estate. Even if I stop buying today, and the 30 million will be paid down to, let's say, 20 million. So there'll be
Yeah.
80 million there. And I didn't use any of my own money to get that 80 million.
And even if you sold half of your portfolio, you'd pay the other half off and you would own 10, $20 million in real estate free and clear.
Yep. It's power of
Good,
leverage and consistency, and a hot
good for
market
you.
there for a while.
Yeah. Yeah. Good for you, Sam. Plugging away. And you've got a great Instagram channel. You're very active on the YouTubes and podcasts. So how can people find you and what's your preferred channel?
Yeah, whatever, my preferred channel is their preferred channel. So whatever channel they are on the most, whether it's X or YouTube or Instagram or Facebook, whatever it is, or podcast, that's what they listen to. Just search for Sam or Faster Freedom, and it'll pop up. There's a lot of fake accounts. I promise I'm not gonna message you to try to give you to give me crypto with an account that has 10 followers. So whatever platform they're on, if they want to like get me for sure to respond, send me a message on Instagram at Sam Faster Freedom, and I'm still there in the DMs. I have a VA help me in there, but her name's Ashley, so she'll tell you that. But usually it's me. If I ever get bogged in, she'll say, "Hey, this is Sam Ashley. This is Ashley, Sam's assistant." So you're going to get me 90% of the time, but just DM me on Instagram, and she or I will get back to you, and then it'll eventually make its way over to me.
Good. And to find you on Instagram, people just look for Sam Primm.
Yep, Sam Primm or Sam Faster Freedom is kind of my name across most platforms.
And you've got an amazing coaching program. Anybody who's looking to actually get some help to get there faster, talk a little bit about your coaching and mentoring program because this is unlike anything I've ever seen before. You guys are doing a fantastic job with this. Talk a little bit about it if you don't mind.
Yeah, for sure. No, thank you. Yeah, we definitely take pride in it. I do because I definitely understand most people's hesitation of the icky guru try to
Yeah.
just sell you something because they can't make money elsewhere, kind of a mindset out there. So it took me a while to actually come up with this and create it, but it is pretty unique. So we have 2,100 students now, all 50 states. A lot of success. A lot of people have quit their jobs and created more income. And how we do it is it's a little bit different of approach. I mentioned it earlier, but we focus on deal flow and we focus on helping you raise funding. And then it's kind of like that customized, holistic approach. So if you want to buy rentals because you have a good job, we'll help you do that. If you want to create a wholesaling company that brings an extra in so you can quit your job, we'll help you do that. If you want to do flips, so we'll help you be flexible as possible. And we have 12 group coaching calls that are basically mastermind calls a week. There's one-on-one slots available every single day with some of the team. There's a Facebook group with over 2,100 people inside of it. There's AI technology that's inside there that helps you sort everything and search for what you want to get. There's resources in there as well. And then there's, of course, about 350 videos that teach you how to do everything step by step. So it's a lot. It's like drinking from a fire hose, students that join. But after a few weeks, like anything else, they kind of understand the cadence and the flow, and they're able to be pretty successful pretty quickly if they put in the effort. So it's a big ordeal to put on and to have, you know, the coaching behind it all, but it's fun to see people win for sure.
And then talk a little bit about the meetups here in St. Louis. In a week from when we're recording this, or not less than that, Pace Morby and Jameel Damji will be in St. Louis.
Yeah.
I'm going to come, but I'm going to be actually late because my daughter's has a birthday party that day. But you talk about the meetups that you do here in St. Louis for anybody that's around the area.
Yeah, anyone that's around the area, or honestly, we have people come from around the country sometimes for them, especially some of my students come. But yeah, we do meetups here in St. Louis. We used to do them with Brian at Buyers Club, but we started our own called Freedom Club, and on the 14th of May, so like you said, in you know 5-6 days, we're having Pace Morby and Jameel Damji. We're renting out this place called Frankie Martin's. We're hoping to have 400 or 500 people there. It's a free event. We're not charging anything for anybody, even though it costs us money to rent it.
Yeah.
But yeah, we just like to get together as many people as possible to help build the network here in St. Louis and to help teach and educate people for free. And then, of course, you go there, and if you want to get introduced to our flipping company, we're going to wholesale 250 houses this year. We'll introduce you to that person. We'll manage your rehab for you. We have a company called SCR Rental where we manage your rehab. We have a lending company where we can lend you money. So it's free. You don't have to pay a dime for it, and you get introduced to our businesses. So it works for us because we get business out of it. It's just like any other marketing tactic, right? You know, you pay money for leads. We're paying money to host an event, and they can connect with us.
Yeah.
And it's a fun time to hang out and you know, hang out with active investors.
Nice. Okay. One more question. A website that people can go to, maybe to, you've got a book, you've got a bunch of videos and trainings. What do you have a website you like to send people to?
Yeah, FasterFreedom.com is just the website there.
Okay.
I do have, like you said, I got a book on Amazon. It's $10 called the Own Your Freedom. Check it out. And then, yeah, there's a ton of free resources, calculator scripts, all this stuff.
Love it. Okay. FasterFreedom.com. Sam Primm, thank you so much, man. We'll see
Appreciate it,
you.
my man.
See you soon. We got to go out and hit the links again.
Let's do
And
it. You can see my
hopefully,
slice in action.
oh man, you're way better than I am. So you have nothing to complain about, which isn't saying much. All right. Thanks, Sam.
Appreciate it,
We'll
man.
see you. Bye-bye.